Hi, I'm Ravi Menon,
Hi, I'm Kailash Kulkarni.
and we are the co-CEOs of HSBC Mutual Fund. A very, very warm welcome to a lot of you to the HSBC family of mutual funds. The year 2022 has been a remarkably interesting year. And for the two of us, the coming together of our two organizations in the creation of this much larger organization has been perhaps the highlight of the year. But from your perspective, of course, the markets, the way the world has been, is perhaps been the most critical point from your perspective. The way we'd like to define it is what we call parallel worlds, almost two worlds operating at a point in time. And we have seen how that's played out. At the start of the year was the Russia-Ukraine war, which led out to many different economic outcomes. The high global inflation that we've all experienced, leading to tightening of federal policy and interest rates, and the impact that it has had on all asset classes around the world. When one reflects back, and we're recording this on the 26th of December, the Indian markets year to date, equity markets, have been broadly up by about 4%. And one would say this has been a fairly disappointing outcome until one compares and benchmarks what has happened with the rest of the world. It's down by 16%. The Nasdaq, the specialist tech fund, is down by 33%. The Hang Seng is down by 13%. So in comparison, the Indian marketplace, and this we're talking about the large cap indices, the Nifty 50 being up by 4%, is actually quite remarkable. And that's why I mentioned the parallel world in which we are currently operating in. And it's naturally interesting to see beyond the large cap, how else have the equity markets done? And you'll find the mid cap has been 1.75% or thereabout, whereas the small cap has been down. To us, this signifies opportunity. Why do we say that this signifies opportunity? Because if one deep dives into the constituent of our various sectors, you will find that almost every year there have been different sectors which have been performing relative to the others. In this year, it's been the banks and the financial services, and particularly the PSU banks, which have been an underperforming sector for a long period of time. On the flip side, IT is down in line with the global markets. So one thing which is very clear is that there is a coupling which has taken place. It's always existed between India and the global economies, but in certain regards, India outperforms these markets. And we genuinely believe that this is the decade for India. At this point in time, our outlook is clearly an India growth story, and our own collaboration acquisition of L&T is reflective of that India growth story. And that is a growth story which we all believe in, which we should continue to invest in. I think that is the key message that I'd like to leave you with. We are going to see markets which will be volatile. You are going to see periods of high interest rates as we are currently doing so. We are going to see some level of uncertainty of earnings. But you put it all together and see what that outcome is in terms of India's GDP growth rate. Will do maybe 7%, maybe higher. And that is going to make us the fastest growing economy in the world. So the investment opportunities are very much there for you to capture. Do rely on your advisors, your distribution partners in making sure you get the best advice and making the best selection for you. To take us forward in terms of what we have in store for you, over to you, Kailash.
While Ravi covered the markets in terms of how India has outperformed globally and which sectors have done well, I think it's pertinent to note that the domestic Indian investor played a very large part in ensuring that our markets remained buoyant. DIIs overall were a big positive, whereas FIIs were negative for this year to the tune of nearly 1.2 lakh crores. The first 6-7 months is where we saw a massive outflow of FII money. But in the last 4-5 months, we have seen that out of 4 months, FIIs have actually been positive about India. Clearly, the world is noticing India and the potential that India brings to the world markets. And that's why we see more money coming into India rather than going out. These are good times for us. If you look at our own industry, the mutual fund industry, we crossed the 40 lakh crore mark in November. That itself is a record of some sort. This is the 10th year running when our industry AUMs have been up. So that's a good sign. But more critically, the retail investor today through the SIP route has actually contributed to 13,000 crores of monthly, with SIP folios crossing the 6 crore mark. So what we are really seeing is a resurgence of not just the FII money coming back, but strong domestic flows, which will lead to a healthier economy or healthier market going forward. When we look at the corporate performance, again, we see very good numbers across many of these sectors, and that should hold good for us in 2023. For me, both equity and fixed income markets would be strong for us. Although, please ensure that volatility will be a part of our game. So you'll have days when the markets swing more than 1% upward or downward, and we shouldn't get swayed by it. More important, on the fixed income side, we are nearly at the top of the interest rate cycle, and we may see a certain pause from here onwards. However, post that, we should start seeing interest rates decline. And that is something we believe will help fixed income markets as we go ahead. So we look forward to a year which is going to be potential for both equities as well as fixed income, a year to look forward to. There are many more positives on the mutual fund industry. I think the financialized savings that's there, more and more people coming into the market. Every month we add a few lakh customers new to the industry who are wanting to come into the mutual fund world. They are testing us out through various products: equity, hybrids, index funds, and fixed income. So today, what we are seeing is investors are making a choice and coming into the category that they would like to come into. All the distributors and advisors are playing a part in ensuring that the growth is coming all around. The fixed income market has seen a lot of money flow from the longer duration products to the very shorter end, liquid ultra short-term funds. But this is likely to reverse, and we may actually end up towards the end of the year even seeing some of the higher yielding funds make a comeback. That is what makes us believe that 2023 for India, for the mutual fund industry, is going to be very relevant and very strong.
I think Kailash made a very interesting observation on the contribution of SIP investors and to the marketplace. And I think what has been achieved has been remarkable. Today, India can genuinely say that we have become independent of the volatilities of foreign flows. And the SIP investor, which is all of you, have played a significant role in helping us achieve that. And I think it's critical for that to continue and to grow. So please continue staying invested. Volatility is there, but volatility is your friend. And I think that makes it very, very critical for us to continue with this behavioral practice. Second, I think the marketplace overall is naturally will grow. The question which you need to ask is, how do you access that? And the only way, to my mind, is to stay invested through this various cycles. As Kailash mentioned, all asset classes are available to you, all products are available to you, and all necessary schemes are available to you. So please do stay invested, keeping in mind your asset allocation principles at all times.
Thank you for being a part of our family. We look forward to your continued support in the year 2023 and in the years to come. You could always stay in touch with us on our various social media handles. We are present on LinkedIn, YouTube, Twitter, Facebook, and Instagram. You could also write in to us on our emails.
So on behalf of HSBC Mutual Fund, a very, very big thank you to all of you for your business and your support. We look forward to more of the same, and we wish you and your family a very, very healthy, happy, and prosperous year ahead.
Once again, wishing you all a very happy, healthy 2023.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.